Welcome to a special edition of 5 Minutes where we're going to dive deep into the complexities of Florida's property insurance market. Over the past few decades, this market has faced a significant challenge, from devastating hurricanes to legal financial hurdles. Today, we'll explore the history, the current issues, and the potential solutions for this ongoing crisis. Florida's unique weather exposure is at the core of the challenges in the state's insurance market. Florida's geographic position makes it uniquely vulnerable to hurricanes, and in these storms, they're becoming more intense and destructive. Rising sea temperatures by up to 2 to 3 degrees in some regions, they're fueling stronger and stronger hurricanes, which act like heat engines, leaving devastation in their wake. I spoke with meteorologist Justin Roth to get his take on the frequency and severity of these storms.
So what are you seeing in the data that points to whether or not there is actually frequency or severity that we should be thinking about?
When you think about that and climate change, it's kind of all melded together. I mean, no matter what side of the political spectrum you're on when it comes to climate change, I guarantee you almost every insurance and reinsurance company believes in climate change and factors it into some of their pricing just because of the fact that they see it in their loss numbers. Frequency and severity are a little bit hard to mess with, honestly, because you think about Florida specifically, and obviously it's a peninsula and it's just kind of sticking out in between the Gulf of Mexico and the Atlantic Ocean. And really, the main thing is, we can't predict how many storms are going to affect a certain area of the country every year. We throw out these forecasting numbers and they're generally pretty correct ahead of season, but really we just kind of gotta wait until it kind of all shakes out. When you think about frequency in general, I looked up a stat right before this show, and there's been 79 tropical cyclones, so you can call that like a tropical storm or hurricane, whatever, since 2000 that have affected Florida in some way or capacity. So certainly there's a larger presence of tropical cyclones currently. It's only been 24 years since 2000, so that's a lot of storms affecting Florida in a short period of time. And we can conclusively say from a scientific standpoint that we are seeing more rapidly intensifying storms, which should be a concern for everybody. Right. If I go to sleep one night and it's a Cat 1 hurricane, I'm probably not evacuating, but what if it goes up to a Cat 4 or Cat 5? That's concerning. Right. So there's things like that. And then obviously another major concern, I think it's been tracked very well over the past few years, is the sea surface temperatures. So ocean water plays a monster role in developing a hurricane. Think of a hurricane like a giant heat engine. The warmer the water, that's what it loves. So when we start seeing temperatures going up 2-3 degrees, which I know doesn't sound like a lot, but for a hurricane, it's a lot. And so things like that really factor into the severity.
To fully appreciate how the changing climate has directly impacted our present state of the market, we've got to take a look at the past. In 1992, Hurricane Andrew struck Florida, causing over $26.5 billion in damages and leading to the insolvency of at least 16 insurers. This catastrophe, it exposed the vulnerabilities in Florida's insurance infrastructure. So in response, the state established the Florida Hurricane Catastrophe Fund in 1993, which was intended to provide a financial safety net for insurers facing massive hurricane-related losses. The FHCF is a state-run reinsurance program which is designed to stabilize the Florida property insurance market by reimbursing insurers for a portion of their catastrophic hurricane losses. Unlike private reinsurance, the Florida Hurricane Catastrophe Fund offers coverage at a lower cost, making it a crucial component in maintaining insurance availability in the state. In recent years, the exodus of major insurers like State Farm and Allstate have transformed the Florida insurance landscape. In 2009, State Farm announced that it would stop writing new homeowner policies in the state, citing unsustainable losses and regulatory challenges. Allstate followed suit, pulling back its presence due to mounting costs of regulatory pressures. This left many Floridians relying on Citizens Property Insurance Corporation. That's the state-backed insurer of last resort. Now here's a concern. Citizen now insures over 1.3 million policies. That's more than triple what it was designed to handle. With its rapid growth, Citizen now faces significant underfunding challenges. In fact, in the event of a major hurricane, it's estimated that Citizens could face a shortfall of up to $1 billion, potentially leaving policyholders exposed. If losses exceed Citizens' reserves, all Florida policyholders could be facing a special assessment, essentially a surcharge to cover the gap. This creates a precarious situation where the stability of Florida's insurance market, it rests on an underfunded insurer that may not be able to meet its obligations in face of a crisis.
Reinsurance acts as an insurance for insurance companies. It allows them to manage their risk by transferring portions of the liability to other entities. Now, to be clear, when an insurer cedes liability to a reinsurer, they are also ceding a significant portion of their premiums that they've collected. Now, this is important to note, as I've heard other outlets misrepresenting this construct, suggesting that insurance carriers get to transfer the risk while holding on to all the profits. This is certainly not the case. But in Florida, the high frequency of hurricanes has led to increased reinsurance costs, which are often passed down to consumers through higher premiums. Now, the Florida Hurricane Catastrophe Fund, they provide a layer of reinsurance, but insurers also have to rely on private reinsurance markets where capacity or the supply of reinsurance, it's been constrained, and the costs have been escalating due to all of the recent catastrophic events that we've been experiencing.
One of the most significant contributors to Florida's insurance crisis is the legal environment. Despite making up only 9% of the nation's property insurance claims, Florida accounts for an astonishing 79% of the litigation related to these claims. This imbalance, it's created what some call a litigation factory, driving up costs for insurers and ultimately for policyholders. Here's a shocking stat for you. In 2021 alone, Florida insurers paid $1 billion in claims-related costs, and 71% of that went to attorney fees and public adjusters, not to the policyholders. So for every dollar that's paid out, only 27 cents actually reach the homeowner who suffered the losses. That's 73 cents of every dollar going to legal fees and other overhead, creating a system where litigation costs outweigh the actual cost of the claims. The core issue stems from incentives created by Florida's one-way attorney fee statute, which requires insurers to pay policyholders legal fees regardless of the case's outcome. This encouraged an overwhelming number of lawsuits, many of which were frivolous or inflated, and insurers could not fight without also incurring massive legal expenses. Another compounding issue was the misuse of assignment of benefits. This was a practice that allowed contractors to step into the shoes of the policyholders and file lawsuits against the insurers directly. Assignment of benefit abuse surged in the 2010s, with some contractors filing multiple lawsuits over small claims and leveraging Florida's legal framework to inflate repair costs dramatically.
AOB abuse surged in the 2010s, with some contractors filing multiple lawsuits over small claims and leveraging Florida's legal framework to inflate the cost of their repairs dramatically. Now, by comparison, in Texas, which also experiences frequent catastrophic events, they only accounted for 5% of the national property insurance lawsuits in 2021, despite its size and the risk profile, which we read all out about. Now, this contrast underscores just how litigation-heavy Florida's market has become. But good news, in December of 22, Florida's legislature passed SB 2A, which was meant to curb litigation abuse. The bill eliminated one-way attorney fees and limited the ability to assign benefits, requiring stricter disclosure and consent. Now, while these measures are still new, early signs are suggesting that they may help and reduce litigation rates over time. This litigation environment has created a feedback loop where insurers face higher costs, so they raise premium and they withdraw from the market, leaving Floridians with fewer options and less affordable coverage. Breaking this cycle, it requires not only legal reform, but actually cultural changes in how claims and disputes are handled. Florida's regulatory framework, it imposes strict controls on how insurers can set and adjust rates. While these regulations, they aim to shield consumers from sudden premium hikes, they also limit insurers' ability to respond quickly to increasing risks and costs. Compounding the issue, inflation and rising construction costs have added more financial strain to the matter. For example, since 2020, construction costs in the United States have risen by nearly 40%, driven by supply chain disruptions and labor shortages. But for insurers, that means higher payouts and claims for reconstruction. But with regulatory limits on rate adjustments, many insurers find it increasingly difficult to remain financially viable in Florida. Now, insurers may also have to look to changes in policy language and their approach to underwriting and claims adjudication. Tim Maloney of Pre-Loss, he suggests that by reducing the ambiguity of coverage and cause of loss, this could improve the way carriers price and accept risks.
Reminded me of the concept of proximate loss versus the primary cause of loss, right? And
right.
is that where you're seeing that ambiguity in terms of what the proximate versus the primary cause of loss is?
Well, if we get into that a little bit, referring to that post, proximate cause is, we get into an accident. Why do we get into an accident? This person ran a red light at the intersection. So we're going to go back in the claims evaluation. We're going to try to determine fault, liability, and the proximate cause. You ran a red light. That's the problem. When we have a hurricane, the hurricane hits an area and damages an asset. The hurricane is the proximate cause. What I am suggesting that the industry needs to do when they focus on the hurricane, and that's where they're focused, they're not understanding the risk resiliency and property of these assets. The issue is all of these projectiles from loose tile on a roof when we have the hurricane damage, but why did the hurricane grab these tiles and throw them around? So I want to go to the root cause. I think that's where some of the ambiguity is and some of the issues are. The industry not understanding the conditions of the asset. I have another $30 million loss that I get into a case study where we have a 1.8 million square foot condo tower. And when we look at the damages, they resulted from gravel ballast on this structure. So gravel ballast should not be on a structure in a coastal community that's subject to hurricanes. So what happened is, instead of sandblasting, we had gravel blasting of this structure, breaking windows, tearing up the cooling towers. The stucco got peppered with all of this.
So I think we can conclude that addressing Florida's insurance crisis, it requires a multifaceted approach. We've got to continue looking at legal reform, so implementing measures to reduce frivolous lawsuits and curb unethical practice by lawyers and by public adjusters. We've got to continue addressing the regulatory environment and look for ways to allow insurers to more flexibly set rates to reflect the actual risk while still at the same time ensuring consumer protections.
And we've got to also look at mitigation efforts and invest in infrastructural improvements and enforcing stricter building codes to reduce the vulnerability to hurricanes. And finally, public awareness. We've got to educate homeowners on risk management and the evolution of the insurance market, really educating folks on how the market works.
Nick Lamparelli, through the Florida Insurance Advocacy Forum, is playing a pivotal role in addressing the complex challenges that face our market today. To sum it all up, Florida's insurance market faces a perfect storm of risks, regulations, and costs. For residents, that means staying informed and advocating for responsible policies and preparing for the challenging insurance landscape. Thanks for tuning in to 5 Minutes. Stay safe, stay informed, and we'll catch you on the next episode. Farewell.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.